Is the customer then the company itself for you, or is it actually the individual contributors of the company, the staff?
The answer is it's kind of both, right? So, certainly the transaction is with the employee shareholder. So they take $100 worth of shares in their company and they trade it for $100 LP interest in our fund. And everyone else does that. It's in the fund. So that's how you get the diversified pool of venture assets. So we could talk about how we pick the companies that are eligible for exchange. But almost every venture-backed company at this point has the ability to accept or deny a secondary transaction, or to accept or deny a new shareholder under the cap table. And even where they don't, we don't really want to do an exchange or work with a company where we're not seen as a value add player to the cap table. We're not sort of working with the company to enhance the value of their equity compensation plans.
Sure.
So, we need to basically win both audiences. And the way it most often works, like we work, our network, and we have an amazing investment committee and board and others making introductions. And we're working with now nearly 30 odd companies with our program. But very frequently what happens is a mid-level executive will find us on the website or find us one way or the other, a referral or something, and will enter into a transaction. And all of the transactions before they're obviously consummated, before they're closed, get submitted to the company. And frequently what happens is the company will say, well, this is different. What's an exchange fund? We haven't seen something like this in the private market. How does it work? And so that conversation happens with the CFO, and the CFO frequently will bring the CEO and think, most of the time, at least the great majority of the time, I think this is a great idea. We could really use this. This helps our employees in a very real and unique way. And so that then kicks off a company discussion about a program.